Okay, everyone, welcome to episode 3 of Behind the Headlines, where myself and my buddy Steve Gomez at Trade Ideas tried to figure out what's actually happening out there. So we bring in some headlines that we see throughout the Twitter sphere, or talking heads, whatever you want to call them, in the market. And then we dive deep and we take a look at what's actually happening with the underlying stock. So today we're going to talk about Apple and some of the troubles that they're having with China. We're going to talk about this big psychedelic boom that we've seen over the last little bit. We're going to round that up talking about gold breaking out to new all-time highs, and then actually some viewer requests. So right off the bat, I want to say thank you for the amazing support. I know Steve's going to agree with me here that we're seeing this is quickly becoming the most watched thing on the Trade Ideas channel. A lot of you guys are chatting back and forth in the comments, so please keep that going. Likes, subscribes, all of that. And as always, if you want to make a request for us to look at something for you, just go right ahead. We read the comments and we subscribe to them personally. So, Steve, how are you doing?
I'm doing pretty good, actually. Won't lie. I'm sure you know this is shaped out to be the best week of the year for me so far, and we'll get into that and why.
Mm-hmm. That makes, yeah, we will. And that will probably be, just to spoil it for everyone a little bit, that'll be when we talk about these psychedelic names. But let's get started here with Apple. This is, to me, going to be one of the more interesting ones, just because I really think there's a fade here. So I'd love to get Steve's idea. And just so people know how we do this podcast, we have a doc, we throw some stuff in, we kind of talk about what we're going to talk about, but our opinions are our own, and we're grown-ups, so we may disagree on a lot of things out there, and come up with our own ideas. And that's generally how the world works and how you get good ideas out of it. So Apple's got a whole bunch of bad news, but this was kind of the one that I wanted to focus on the most. They're saying that Huawei, which I think I pronounced right, which is a Chinese cell phone provider, is actually doing way better, and that iPhones are continuing to slide as a sales feature. And this caused a little bit, if we go here to the chart, a little bit of a sell off earlier in the week. Now, for myself, not being a fundamental guy at all, I'm looking at this, and I'm looking at basically this chart, and I want to focus on and get Steve's opinion on just this massive zone that we're seeing right here. That was the prior high back in this area. It was a low right here. It's a low right now. We're recording this on Friday. So if we close right here, there's a little bit of a hammer or a bottoming tail. So what do you think, Steve? Do you think that Huawei is going to come along and kick Apple's ass and we should be shorting here, or do you think that this might be a little buying opportunity?
Well, we actually have kind of a conflict of two technical theories, and I'm happy to talk about them. Your chart is wonderful because there's no indicators on there. It's showing the purity of what we would call a pivot level. You've
Mm-hmm.
got a lot of data, a lot of weekly candles showing prior support, sorry, prior resistance, excuse me, and more recently, in the last two couple years, that's the support level. So pivot levels cannot be ignited. Those are giant walls, and they are defended. But now, come over to my desktop, and we'll take a look at when we have some moving averages added to the picture. And we don't know which way this pivot level is going to go, which, by the way, is pretty much right there where my cursor is. I'm back on a daily. Okay, we're back on a daily chart here, but I'm going to use moving averages to make a point. Um, to me, we're on the other side of the mountain here. And I say that because we're under the 200-day, the 50-day, the 20, and the 10. We're under all moving averages. And that is a completely different perspective than what we had back here. Think of this as like a mountain climber. And each time they build a higher base camp, that's a trend, higher lows. And the footing, okay, I'm going to use a visual here. The footing is strong with these 10 and these 20s holding the backstop of the 20. The 10 holds the momentum. And then we just kind of lost it here. And we had nothing but really just kind of a washy range. But now, rather than having strong footing as our mountain climber example that we had back here, we're on the other side of the mountain. And I call this like the armpit. We are now underneath these moving averages, and we're actually looking out for rock slides coming down from above. What I think can happen here is we had a pretty precipitous drop below this definitive 180 level. I see maybe another day or two bouncing right up into this area. And guess what I would do there if I had the gumption to be a big shorty? This is how you want to short stocks. But I don't know if I'm ready to short this market. But Apple as an individual name, I think we're going to see a little bit of a relief rally, dead cat bounce. I know some people don't like that term, but I can't help it. I'm Gen X and it's ingrained. I've got 50,000 hours of looking at charts, and that's what this is telling me, Michael.
So, first of all, I think that that's interesting that there's conflicting point of views, and often when my rule, anyways, when you have conflicting time frames like that, you're probably best to do nothing, which is certainly an option, right? It may be that Apple holds this support, and it may be that it stays under those moving averages for a period of time. So, if that's going to be the case, then we just kind of move on to everything else. The reason that I wanted to highlight this one in particular was the massive weighting that Apple has in the entire market. So, if this zone that I'm talking about here, if this zone doesn't hold, then what does that mean for the overall market, right? So if Steve's right and it bounces up maybe a day or two into those moving averages and then it rolls over and we're definitively below, call it 170, give or take on this one, that to me is kind of worrisome to the market because last I checked, I think Apple is like a 5 or 6% weighting in the S&P 500 and even more so I think in the Nasdaq 100. So that's why I wanted to look at this because Apple in and of itself for me is kind of boring to trade, right? Steve's going to talk about an industry that's really on fire and making like 50% gains soon. But I look at Apple as almost a bellwether for the entire economy. I don't know how long the market continues to climb up when something like Apple has this threat that it's going to roll over. So yeah, this is a chart that I think I'm going to watch going into next week. So Steve, why don't
Yeah,
you
it I was just going to say it can go either way. Your weekly time frame, my daily. I don't like the fact that we're under all those moving averages, so that kind of gives me a little extra weight. And back to the very first podcast, you and I talked about weightings of markets and how we might differ on some opinions of that. It cuts both ways. That it would appear with Apple, it can go nicely on the way up if you're 6-7% weighting in an index, but on the way down, like you said, if that level gives way, that weighting can cut both ways and take the indexes down with you.
Yeah, and just a quick note for the viewers to keep an eye on, and this is what I actually keep an eye on here. And a lot of people I find don't even know about this. So we have a weekly chart here of the RSP. So this is the equal weight version of the S&P 500. So just so people know that regularly the S&P 500, how it's weighted is the larger the company from a market cap standpoint, the more of a weight it gets in this index, where the RSP takes the same 500 companies and it represents them all completely equally. So the smallest company in the index gets as much weight as the largest company in the index. So often when you see the switch and the change between the S&P 500 and the RSP to which one's the leader, it can give a pretty good idea of whether we are in a market that's being driven just by the big guys, the Mag 7 or FANG or whatever they're calling it now, or whether it's more of a stock pickers market. So obviously, us as traders, I love it when the RSP is beating the S&P 500 because that means there's a lot of names moving as opposed to just a concentration in a bunch of names. So, if you don't already, I would add this to your weekly rotation as a chart to keep an eye on to give you that sense of, hey, is the market just being pulled up by the big guys or is everybody taking a turn? All right, Steve, you want to go to some psychedelic news?
Yeah, I do. Go ahead and we can keep it here if you want. We can preface it by saying Michael and I are essentially talking our book here in MindMed. We've both been long. Michael's been long and strong. I've been in and out, in and out. But I like to wait until the chart confirms the story. And if you were paying attention last week down here, 2 weeks ago, excuse me, at $5, I'm the curator of the Trade of the Week, Trade Ideas. I mentioned MindMed above $5 could be interesting because it was starting to get above, right? There's our base camp building, strong footing, climbing the 10 SMA. And there's a saying that price action often precedes news. And boy, did we get some great news yesterday. It appears that the data that MindMed released is extremely potent. It's extremely, what's the word I'm looking for? Effective.
Yes.
There's a lot of efficacy. And we were both pleasantly surprised. So this is a wonderful example of me getting a chart to confirm the story. Now, this has now probably become the leader of this space. I'm going to go through a few names here. We're going to look at them technically and see what the different stories are. But I think you've got to identify the leader in the group. And based on the fact that they're getting ready to go into phase 3 FDA trials, they're kind of leading the way. So this is our leader. And boy, right off the bat, I'm pretty impressed that we gave back a lot of that yesterday. We were way up there above 10, but we're holding and we're climbing back up. In other words, that wick, that giant topping wick, is being eaten up again today. That's extremely strong. And I want to quickly go to the intraday, which just again bolsters another one of my points. The chart is confirming the story on the 15-minute. This is today. This is the 15. This is my 10 SMA. And as long as the 15-minute candles are riding above the 10 SMA on the intraday chart, you got momentum, and you better sit on your hands, because you can let this thing run a little bit more before you get the itch to take profits, which, by the way, is a tease. We're going to talk about some psychological tips if you guys make it to the end of this podcast. So that begs the question. Did you want to say something there, Michael?
Yeah, well, and I just wanted to really hit home what you were talking about there, where again, you were saying that what is probably 2.5 weeks ago, you found this as a breakthrough five, and it was pretty much purely a technical level. If you go back on the chart, you zoom out a bit, you see that $5 was a massive level. It hit it like 3 or 4 times and bounced off it. So before any of this news came out, Steve was just saying, "Hey, five's a psychological level. This stock is incredibly beaten down, and if it's going to break through that, I think you were actually on here talking about it, mentioning that there's more institutional trading that happens if you get over $5. There's a lot of funds that are mandated; they're not allowed to own stocks under five. So completely, avoid of any story, and it went from five to like 650 or seven from that news. That's already a great return. And then all of a sudden, this news comes out, and I'll actually switch over here because I have the news here, and it was essentially just an FDA breakthrough. FDA was giving breakthrough therapy designation. So I actually had to look that up because, again, we're technical guys. We don't know much about the news. But essentially just means that now MindMed and the FDA can work way closer together to expedite through phase 3 and to get this one out. And it's because they found in this study of LSD on people with anxiety disorder, it helped out absolutely dramatically with zero side effects. Nobody left the study because of anything bad. There was nothing counter that happened to it. So the FDA is seeing that and saying, okay, let's see if we can kind of push this along. So this happens, and again, I just want to note the date, on March 7th. So on the day that Steve was talking about with the really big candle there. But it followed the trend, which was already heading up. And same as, you're seeing a lot of these regional banks that are having problems, they're all in downtrends before they have problems. So I guess the takeaway that I want to give the audience on something like this is that quite often it's not the news. Like, we're talking about how the news can sometimes be a fading event because somebody always knows something. So usually the trend of the news. And Steve, I think you're going to talk about some leadership ideas here as well, because it looks like
Sure.
some
Yeah.
companies might be doing better than others on this news.
Yes. So we'll try and get a gauge. And anytime you're going to, get into a small cap hot sector, whether it's cybersecurity, vaccines, I've been around solar, EVs. They come and they go in alternative energy. But more on the story, real quick. Insiders. I think that's what you're keyed on. I'm a cynic by heart. I know that insider trading is against the law, but it doesn't stop people from calling their cousins and having them buy options in their account. So insider trading is very hard to hide on the charts. Usually they use options, but it still spills over. And secondly, people that know me know that I really loathe big pharma. And that's one of the reasons that Michael and I are kind of like this new approach. SSRI market is a sick amount of people, not to use a word like that, but there are so many people on these drugs right now and the side effects, and they don't like it. And you give them an ulterior option, they're gonna buy into it. So is the price confirming that? Yeah, I've seen a lot of times these things sell off after the news. We're still digging in here on the news. So let's look at a couple other names on the daily chart here. And this one I'm going to start with. It's really interesting because I'm in it and I don't like what it's doing. So I have to now play the odds. You'll see here intraday, this is CMPS, Compass Holdings, and this is the 15-minute chart. It's not having anything to do with the sympathy of MindMed. Now I let it come down and I let it break down below this level to see if they could run some stops, and they did. But pay attention to what I did here. I have drawn a hard line stop. That blue line is a hard line stop. I can turn my back and finish this podcast and know that that was probably the worst of it. But bigger picture, Compass is not giving me a whole lot of excitement. What is giving me excitement, and this is a 40-cent stock, you guys, CYBN. It was at 40 cents, and you can see why the sellers jumped in at 40 cents. There's a 200-day moving average, so it's acting as a pivot level. Now, this is a lottery ticket. All right, anything under $5 is still a lottery ticket. But I love the volume, and I like the action here intraday. It was really holding its moving average until now. It's starting to give way a little bit. Whatever, I'm going to stay with this one. So I'm actually in that one as well, looking for sympathy. But I'm also in that CMPS, so they're kind of offsetting each other. Let's look at some others. Somebody brought my attention on Twitter to ATAI. I was not aware of this one, but apparently this is a player, and it looks like the chart might be confirming the story. It's certainly grinding higher. You
Hmm.
can't fault that. Yeah.
Nice
Barry
little
in
peak
our
there.
live yeah, Barry in our live trading room also was not afraid of some lower price stocks, and he nailed PBM overnight. So I believe I don't know if he nailed it overnight. Maybe he nailed it pre-market, but nonetheless, here's another under five stock to watch. I don't know if I would chase this one up here. It's had a pretty good run, but what you want to do is wait for these moving averages to come into play, and then you might find an entry next week. But lastly, and I did buy it because Michael Noss showed it to me. I love it. Psilocybin, PSIL. This is just basically an ETF fund. And what I love about it is I can get exposure to all of them that are out there. And look what it's doing today. It's trying to break out above its 200-day declining moving average. So to me, the chart is confirming the story that many of these players might be getting ready to make a move. So this week, we're calling the week coming up next week of March 11th. Don't lose track of these psychedelic stocks. There could be a lot of headlines over the weekend. A lot of people do their research and they come in with market buy orders on Monday.
Yeah, and I really like the idea there of the ETF as well. So, just to summarize what Steve was talking about, you gotta go to leadership, right? You got to figure out, okay, if there's going to be a move in a sector, what do I think is going to be the move that, or the stock that leads that, right? Showing that, right, MindMed's doing well, that Compass was kind of falling apart. So it makes sense to go to where the leadership is, but if that is too much as an active trader for you, and there's absolutely nothing wrong with this, because I think ETFs are amazing vehicles, that there's tons of them out there, you're basically just offloading for a couple basis points. You're offloading the picking of the companies to someone else, and you can just trade the theme. So that PSIL, or whatever it was for the ETF, if you're like, hey, I'm really excited about psychedelics, but a lot of these companies, maybe I'm a little nervous about, maybe they move a little bit too much. I don't have the time to keep an eye on them. Always go down to the ETF, and there's nothing wrong with doing that when it comes to themes or sectors. If you think oil's good, instead of going through all the oil stocks, take a look at the ETFs. Now, what you're going to do is you're going to get safety, but as we know with trading, when you get safety, you also get diminished returns, right? If you pick the winner in a sector and the sector's on fire and you pick the right horse, then you're going to do amazingly. So just you got to look at it and say, is that trade-off good for me as someone in my trading style and my experience and all that. I think there's absolutely nothing wrong. I think it's a great idea that Steve mentioned. It's just hey, if you like the psychedelic side of things and you don't want to get into the nitty gritty, you just stick to the ETFs.
But you also need to know the players. So spend some time going on Google researching. Trade Ideas has a compared list of competitors, but get a list of 7 or 8 names that you know. And when that day comes, when they're screaming, you know which names you should be looking up.
Hmm. And yeah, it also
All right.
makes sense too because you gotta know what's in the ETF. I should have said that, but yeah, you have to know what's in there too.
Yeah. Yeah. Do that research too.
So
All right. I
speaking
think
of
somebody had a request, didn't they?
Well,
Or is that
speaking
where
of
you're
an
going?
ETF, we're going to pop over to gold here for a quick second. There's really
Oh,
no
right.
headline
Yeah.
here other than gold is making new all-time highs. Um,
Yeah.
and I grabbed a bunch of headlines, but they're all saying the same thing. It's just, hey, gold's making new all-time highs. So what I want to kind of highlight is now you're starting to see the headlines, right? I talked about gold and we were internally talking about gold and all in the live streams, and you can check out on the channel when it was breaking out right on this candle right here. And the reason for that, if we go over to the weekly chart, you can see this was a weekly all-time closing highs last week, right? And we're on Friday of this candle, so the close of this candle right here. The reason that I'm interested in gold, if you go to the monthly chart, you can see how long it's been rejecting from this area. This is all the way back in 2020. So we're talking, 3 years plus of every time it gets up in this zone, it rejects it. Now, my worry is, and the reason I wanted to talk about it on this podcast where we talk about headlines, is that people are going to do just like what you talked about, Steve, on the weekend. They're going to start doing their research and they're going to start reading, oh, gold's making new all time highs. Maybe I should get into gold. But look at this daily chart. It's up 5 days in a row and it's up a huge 5 days in a row. Just like we talked about with the psychedelics and what Steve likes to use with his moving averages, I think that that's the move on something like this. You put on a moving average that is suitable for your time frame, and you wait for a pullback. You wait for the moving average to catch up. The reason I want to talk about this is I'm worried that after a monster move for something that's a incredibly safe asset that doesn't get this insane volatility. If you wake up one morning and gold is up 40%, then something incredibly bad has happened in the world, and we're talking from 190 to 205 in 6 days. So that's what I wanted to kind of talk about here is just, hey, yes, it's making new all-time highs. Yes, that's probably good for it in the long run. Just be careful on FOMO on this one.
Yeah, don't chase. You can't chase 5, 6, 7 green bars. You're just asking for a reversion to the mean. Then you'll realize I didn't want to do that, and I'll probably never do that again.
Mm-hmm.
The other thing, and it's not so much chart related, is there's a big discussion. I wonder how much gold would be breaking out if Bitcoin wasn't around, because there's more and more Bitcoin showing up in people's portfolio where there used to be gold. And so it's the point is, even with those headwinds of Bitcoin outperforming, gold is still moving higher. That's impressive to me.
Well, and to be honest, I think that might be again, as someone who likes to fade the news and a cynic of the news, I think that would make the most sense. So when inflation finally started to chill out a little bit, that's when gold went higher. And then when Bitcoin, which everyone is saying is digital gold, broke out and has this crazy run, now you're seeing a move in gold. If you were to sit and talk to someone who just follows news, or God forbid you're talking to an economist, they would expect these things to be, counterintuitive, right? Where Bitcoin is generally speaking a risk on asset and gold is generally speaking a risk off asset. So the fact that they're both running together, I think, is hilarious and poetic, and why we look
Well,
at the charts.
but I'll just finish with this on this topic is that I think they both are saying the same thing at this point. They both hate fiat currency dollar. So,
Mm-hmm. Yeah, and if you guys want to chart the dollar again, we get questions all the time, but yeah, we have UUP, right? So you can see the dollar. And I was looking at this earlier today, and it does look like we had a pop up here in the dollar, and it's starting to roll over again. So this,
it's below all moving averages now on my sheet, on
yeah,
my chart.
so it could be right. This is so for people again. I'll explain the ETFs. I love ETFs just because they're different ways to not so much. I don't trade them very often, but it's a good way to express. So what the UUP is it takes the dollar and it compares that against a little bit of euro, a little bit of Canadian dollar, a little bit of yen, like all of the different currencies. So it's a good way to get a good picture of the general sentiment of the dollar as a whole, right? And yeah, you can see it, it's starting to roll over a bit. Financials are doing fantastic, but it seems like people are starting to get a little bit cautious about the dollar here, at least for the short term.
Which is a great segue, isn't it, here, Michael, in XLF?
Mm-hmm.
Somebody had asked us to look at that. Oh, no, no, excuse me. That was
XLV.
XLV.
Yeah,
Thank you.
XLV.
Look at me.
Yeah,
Get me
so
deep into this
we
podcast.
again, anyone who's here this long, if we take chart requests. So the idea is we'll go through the headlines that we think are interesting. Any charts that you want to talk about, just put them in the comments. Again, we read the comments. You'll see myself and Steve there responding to you. And yeah, we'll bring it up and we'll each do a little bit of analysis on some of the names that you're interested in and give you our thoughts.
All right, I'll give you my thoughts. Over here on the weekly, we can quickly see using our thumbnail charts that we have broken out on the weekly. We may be due for a pullback and a test, but I'm not calling for that because what I'm seeing is using my two favorite moving averages, the 10 SMA, which I refer to as the momentum line. It holds momentum into play, but every now and then that momentum will break and brings in the 20 SMA, which I call the backstop. Little anomaly there, but backstop, backstop. As long as a chart is staying above its 10 and 20, nice pullback into the backstop and it's reaching high. There's no reason to be bearish or shorting something like this likely it's probably going to come back up and test those highs again. So the chart is confirming that healthcare ETF is extremely strong on many different time frames.
Yeah, and you're not gonna. I don't really have much to add. You're not gonna get much disagreement from me. I will say, depending on your time frame, maybe I just have a weekly chart up here. Maybe a little bit extended on the weekly chart. You can see it's only been these two down weeks in the last little bit, so maybe a little bit extended. But certainly, there's no reason that I could see to short this name. And if your time frame's more of the daily time frame or shorter, then I think you're right on, Steve. It's obviously in an
I'll,
uptrend. It's in a strong uptrend. That's about it.
I'll give you this. Whoever is asking this question, if this were me and I was long and I was trying to hold on for as long as I could, hit my screen here again, I would wait for the first closing candle. That's my number one method, is to wait for the closing candle on the time frame. And so the first closing candle below the backstop of the 20 would be my signal candle to get out.
Yeah.
That's how I would handle it.
Yeah, and that's the same thing I would do. I'm not going to participate in this one way or the other, just because I like to
Mm-hmm.
hold for multiple weeks. So for me, I can't really buy something that's up this much. And again, there's no reason to bet that this is going to stop anytime soon. So
Mm-hmm.
no new trade for me on this one. But like Steve said, if I was in it, I'd pick a moving average and say, hey, if it closed below that, get out. That's my favorite way to exit trades, because I think it takes a lot of the guesswork out. I say all the time, I think exits, especially for profits, it's the hardest part of trading. You buy something, you put out a stop loss, it hits a stop
Mm.
loss, you go outside and kick rocks and you move on. But yeah, exits are the hardest part, so you can move. I think that's a good way to do that.
Another another good segue, Michael, because um, basically just keep your eye on those psychedelic stocks. We're going to end this session this week with somebody's request for, some tips on psychology of trading, which is probably a good segue from the psychedelics. The psychology of trading is extremely important. Just like a golfer really wins tournaments between his ears, trading is the same thing, and we all fall victim. I'll tell you this: when you start trading live money and you're new, the market is going to pull out your worst psychological flaws. And I mean FOMO, greed, beating yourself up. There's so many doors I could go down. We could do a whole podcast on that. But I'm going to focus on 3 tips to help you guys with psychological trading. All right. And the first tip has to do with selling half. Michael had just said sometimes it's hard to know when to sell. And one of the worst problems we have, or the best problems we have as a trader, is saying, do I sell here and take this profit, or do I look for more? Because it looks like it wants to go higher. And the worst thing you can do is just go, I want to sell now, or sell it all, just get me out because I want to book that profit. Well, I said sell it all for a reason. So we all have 2 demons, a greed demon and a fear demon on our shoulders, talking in our ear constantly, trying to help us make emotional decisions in the moment. So if you can just flick them off, you do that by selling 1/3, 1/4, 1/2, and that satisfies those demons and it shuts them up and it allows you to take profits but still be in for longer moves. So it's a win-win deal. You got to pay yourself along the way. The second and the third tip have to do with people who suffer from over trading. Maybe you're somebody who has fear of missing out and you just can't be shown a chart without jumping in almost to an addiction. So, point number 2 would be, I call it the trade genie. And I've done that in the past when I've over traded. I tell myself I get 3 trades. Do you want to blow them all in the first 20 minutes? Or do you want to sit back and make sure those 3 trades you get, those 3 wishes you get for today are really solid and they meet all your requirements? That really forces you to not overtrade as well. And the third tip is what I call the 20% drawdown rule. Let's say you're an active trader and you'd love to make $1,000 a day and you hit that $1,000 in the first hour. Well, ideally, you want to keep going, but one of the worst feelings in the world is to give that $1,000 back. You'll drive home with a look on your face of, how did I make that money and give it back? What's wrong with me? So, to prevent that type of scenario, because it's a horrible feeling, let's say you get to $1,000 and you get up 1,200, but all of a sudden you pull back to $800 drawdown. You don't want that. So you just cut the loss and you go home with $800 and you feel a hell of a lot better than you would that day having given back that full 1,000. So sell third, sell a half, satisfy those demons. Give yourself 3 trades a day. Make sure they're good because you only get 3. Or put in the 20% drawdown rule for your daily targets. Those ideas will help you stop over trading and also just get better results in the long run.
Yeah, it's funny. I certainly agree with all those. And I remember when I started to trade at the prop firm, that they called it a loss from top. And that's what that was. That drawdown rule, they actually hard coded into the system because they found the moment they did that, where it would take whatever your P&L was, and if you lost it, yeah, I think it was 20 or 30% of that, it would shut you out for the day. And they did some studies of before and then after they implemented that rule, and as soon as they implemented that rule, the traders were doing much better because it stopped that I was, I'm up, I think I'm a genius, and then blow it all away, right?
See, we all learned on a trading floor. We didn't learn on the island of being by ourselves in our bathrobes here.
Hmm.
So that was one of the worst things I had to come up with quickly, because when you're in a room full of guys that can't control their excitement and everybody's calling things out, you're going to start getting pulled out of your game. You're going to be pulling up their charts. You're going to be chasing things because I'm smarter than this guy. How the hell is he making more money than me today? You know, you start going through all that. So that's a good lesson.
What do they say? There's a quote: "A comparison is the thief of joy," where it's,
Yeah.
as soon as you go, because I remember doing that a few times. You have a great day, you made like 2-3 grand that day, and you look great and you feel great, and everyone is at the end of the day talking about how they did, and that guy made more, and that guy made more, and that guy made more, and then all of a sudden this amazing day you just had doesn't feel nearly as
Well,
good. So I like that.
I'll
Maybe
tell
we'll
you,
make.
and Andy did that to me all the time in the office. Made me feel bad.
But
He was more aggressive.
I love that because, and I think that might be something that we do. I think that might be a theme of the podcast whenever we have ideas, because you're right. When it comes to, we're talking about the news, we're talking about how it affects charts. That's all psychological, right? It's all baked in. And really, a lot of people say, oh, trading is 70% psychology or something. I think it's 100%, right? At the end of the day,
It's
uh,
definitely 90.
you could sit down and almost do things at random if you had a solid plan behind them and do well. And that's what we try to do with trade ideas, is to say, hey, if you just focus on the stuff that's moving, right, and you develop any kind of plan around that, you'll end up doing well, because we're showing you the stuff that's breaking out momentum stocks. We're showing you relative strength on daily charts. Focus on the stuff that's moving, and then just have a plan around. And then it's all about not doing something dumb. So keeping
The
the
rest is up
psychology
to
together.
you.
Yeah.
The rest is up to you. We give you the tools.
So that was great, Steve. I like the psychological wrap up there. I appreciate everyone for stopping by. Again, if you've made it this long, just give the little thumbs up and a subscribe on the channel. And if you want your charts looked at, then just again send it in the comments below. Give us a tweet on Twitter, whatever it is. Just get it out to us, and we'll look at those for you. So, thank you guys. Have a good weekend.